Aniruddha Sarkar, co-founder and CIO at Equinova Investment, joining in. Aniruddha, very good morning to you. I think the first thing that I want to understand how you are looking at is the IT meltdown. This has now become, we've had days when there were concerns, then there was a bounce back, then there were concerns. This is now looking like large number of investors or enough powerful investors have made a decision that Indian IT services are not going to withstand the AI avalanche that's coming. How are you looking at it?
No, I think absolutely you're right. I think, in all your earlier interviews, I've maintained that, I've been underweight on IT. And I think that view is now broadly getting, I would say, accepted across the investment world that Indian IT companies definitely, they have not evolved at the pace at which they should have evolved when they had the time, they had the manpower, they had all the skills in the world. But I think what is now being visible on the screen, and if you look at the price corrections, I think it is the premium valuations which Indian IT companies were getting, which is now getting a big question mark that if the growth is going to be very, very below expectations. And definitely the big issue is that the pricing power of IT projects is getting revised. And that's a fact which is happening, that all the IT projects pricing is getting revised. The size of the projects are becoming smaller. Most Indian companies, typically the bigger companies, have a very large headcount, and that is where you have a large fixed cost, which means definitely even if we are able to evolve with the application of AI in different industries, I think the large headcount is something which will continue to be a big issue. And I think that is where the price reactions are happening, where the multiple contractions are happening.
So we've seen multiple contraction take place, but the argument, Aniruddha, a lot of people are making is, or the question that people are asking is, at what point does it turn attractive? Or at what point can you ignore the valuations, right? Till what point? So what point is that for you?
See, for me, more than valuation, if you ask me, Alex, if I look at the valuation, it gets very attractive. And in fact, I have been thinking over the last 1 week or so whether we should take small bites into IT companies, and all the more the mid cap and small cap IT companies, because valuations have become attractive. Now, this attractiveness of the valuation is looking compared to its own history, but not if I look at the price to earnings growth ratio, which is the PEG ratio. On a PEG basis, I don't think so. Indian IT companies are still attractive, but I would say major part of the downside is definitely behind us. From here, what we can see is more kind of the sideways correction. Now, in the sideways correction is typically wherein I would say valuations have become attractive, but I would say don't rush to buying. More than valuation, I think what I would be really looking for is which of these mid-cap, small-cap IT companies are able to implement AI on their existing products and enhance the offering to the customers, and that is where the value addition will happen. So it's not just that Indian IT companies have missed the bus. I think there's a lot of work which is going to be happening in AI applications, and that is where I think I would want to wait and see which are the Indian IT companies who are able to adapt and evolve much faster for implementing the AI on the top of their existing offerings.
Aniruddha, I'm just going to come back to you. I want to address the HUL numbers that have come out, and on the first glance, it seems a bit of a miss. We'll, of course, wait for the details to come in on how exactly the street is looking at it, but some of those numbers on your screen. In fact, you saw a bit of a dip and then a recovery now. Revenues at 16,441 crores. Slightly better than estimates. EBITDA is in line pretty much, 3,788 crores, in line with what estimates are. EBITDA margins just about 30 basis points negative. So largely not too much trouble. It's net profits, which perhaps lower by 30%, but also lower than what estimates were coming in. So which is why you are maybe seeing a bit of a decline on the stock initially. It's that profitability figure. But we need to wait and figure out the details of whether this was a one-time hit, some GST impact. A lot of companies have also accounted for labor code Is that what has hit the profitability? We need to wait for some of those numbers, and we will get you more analysis on that. But at first, hit that is what you're seeing in HUL, gone into the green now. We'll try and get an analyst up on it as well. Anything that you're seeing, Alex?
I was looking at a couple of developments, right? So you're talking about exceptional items, and I'm looking at the impact of discontinued operations, and this is in rupees crores, about 100 crores or thereabouts of an impact on account of discontinued operations that you can see. But the number coming in at what, so the EBITDA number is more or less in line. The PAT number is where the problem lies. So it was expected to fall about 12% or thereabouts, and possibly on the margins front, right? You have an expectation of about 23.3% and 30 basis points of a miss on the margin front. The revenue is slightly ahead, as you pointed out, but more or less in line. The PAT number coming in at where it has is where the concern is. Why don't we go across to Aniruddha? Okay, we've got Sharad joining in just a bit to get us some details. You know, the major question marks, guys, that we will get answers to at the press conference is on the volume projections as well. It is expected to be in low single digits. We've got Sharad joining in with some more details on the earnings. Sharad, what are you picking up? It seems like a miss on the bottom line.
Well, Alex, there is an important element of a profit which is from the discontinued operations. If you look at it, that's coming in at almost 4,485 crore rupees as well. So if you include that, there's a slight kind of a beat on the profit numbers. Largely the EBITDA numbers, if you look at, it's in line with what the street was estimating, and a slight minor beat when it comes to the revenue also. We'll be tracking the volume growth also as we get the press release, but right now it's a kind of a neutral impact coming in, and that's why we are seeing a recovery coming in after HUL came out with its numbers. The net profit is down 30% with this adjustment, and overall the revenue, if you look at it, it's coming at 16,441 odd crore rupees versus the expectation which was at almost 16,156 rupees, and EBITDA margin also has been largely flattish, coming in at 23% to 23.3%. It's expected that the gross margins would be coming a bit lower because of the benign raw material cost, and the commentary, especially on the volume recovery, would be very much important going ahead.
Aniruddha, Sarkar, it's quite a bit of volatility at this point. HUL numbers, you're seeing the stock price drop as much as 1% at this point. So seemingly you're going to see that same single-digit volume growth, and the top line as well as the EBITDA number more or less in line with expectations. Margins coming in slightly below. What do you make of the first flush? Have you been looking at HUL numbers?
So HUL and most of the FMCG pack, I would say it's an avoid for me, because the volume growth is something I would always want to get an idea on. And unless I get a comfortable volume growth number, which I think even what the market would be wanting to see from the press conference, I think volume growth is the real kicker. And unless we get a confirmation that, the volume growth is picking up, I won't be putting my bets on HUL, or for that matter, any of the peers in the industry, because valuation is not comfortable for me.
24th September 2021, the price was 2746. We are currently at about 2450 and change. These stocks haven't done precious little, not surprised, have done precious little, not surprised. Aniruddha doesn't like it. Aniruddha, do you have any other FMCG name in your list, or are you playing consumption differently?
I'm playing consumption in a different way, because FMCG, I don't have a single FMCG stock in my portfolio.
Wow.
And when it comes to consumption, I'm playing more via the autos, via the auto hands. I'm playing via the new age companies. I'm playing via the hotels, because these are the areas where the growth is happening. So ultimately, what I chase is earnings growth, and these are the pockets where the earnings growth is happening.
Okay, thank you so much, Aniruddha, for joining us this morning. As we cover IT, HUL, and so much more with you. Always a pleasure having you on.
It's a pleasure.